Hey everybody, this is Dr. Tom Carr, aka Dr. Stoxx of drstoxx.com, drstoxx.com, and I'm recording this short look at the major indexes, the sector funds, sector indexes, and a handful of stocks from some of those that came up as I'm doing some chart work, getting ready for the next couple of weeks of trading. Here we are on the 6th of February, the very first week of February, we've had some ups and downs in the market, but we're seeing some solid patterns that I will share with you in just a moment. But hey, if you want to join me and a great group of traders in the live trading room or the live options room, you go to subscribe, scroll down, live trading room, $49 a month, add on the live options room for just $30 a month. And if you don't have time to hang out in the room all day with amazing people and watch everything I'm doing, I give you every stock I'm trading, every option I'm buying, my entry price, my stop price, my target price, reasons for the trade, updates along the way. Then you can join us. But if you don't have time for that, go to Stock Pick Advisories. We've got 2 daily stock pick letters and 1 weekly letter. Okay, now let's go over to the charts. Some interesting things going on. So basically what's going on here is that we've got the NASDAQ. I'm sorry, let me back up. The S&P 500, the Dow Jones, and the small cap index, the Russell 2000, all doing pretty well, all things considered. The NASDAQ is the one that is the laggard that has broken through support, that is showing, not today, but showing some weakness over the near term. So I want to make a distinction here. We've got the NASDAQ on one side, which I think you should avoid. It's not really a short here, but it's not a long, and I don't think it's going to be a long for maybe a week, maybe a little longer. But the S&P, the Dow Jones, and the small cap index are okay for now, for longs, at least with a short-term horizon. Let me show you. So here's the Dow. We are long the Dow in the live trading room, and we're long using the micro E-minis. We've got a breakout today after a nice consolidation. This is just perfect. This is such a bullish chart. You've got the 21 period above the 50 above the 200. All three are rising. You have this nice month-long consolidation base getting tighter and tighter. You look down at the volume balance, it's leaning on the bullish side. And today is breakout day. So we bought the micro E-minis yesterday. Nice up gap, continuation, breakout, good volume. And we're enjoying that today. And I don't know how high this is going to go, but I think over the next couple of weeks, you're going to see, I think, some outperformance from the Dow and some underperformance from the NASDAQ. So let's take a look at that. The NASDAQ 100. Here's the problem. On a short-term basis, not the long-term, but the short-term basis, we have broken through support, and it was a nasty break. 3 big red bars down with gaps in between on heavy volume, and that kind of bearish pressure to the downside, all that selling, all those people that were maybe buying the dip and now they're underwater, that is going to keep a lid on any upside. Now we've got a big upside day today, and there's some good stuff going on in some of the subsectors of the NASDAQ, including the memory space, which is coming back online. We are in STX. MU looks good. SanDisk and WDC all look good there. The semiconductors are back online. That space is going to be fine. We are long SOXL in the live trading room, but the mags at the top of the NASDAQ especially, and some of the other sectors like the software, of course, still weak, probably not going to recover real soon. And some of the other subsectors associated with AI and data centers and all that infrastructure and electronics, weak. And just, maybe a little bit of dead cat bounce today, a little backside bounce, a little bit of a relief rally. But other than that, I don't think you're going to see too much more upside. The target here would be the backside of that broken support. But you've also got a ceiling at right around the current price, 607, 608. Most it will get, I think, maybe next week it gets up here at about 614, tags that, and then it's all downhill from there. How far down can the NASDAQ go? Well, I don't think it's going to go too far. I would suggest that this pivot low here around 580, 585, a dip below 590 at least, is in the cards next week sometime. So my map looks something like this, right? Maybe a little bit more of a bounce. Don't think it's going to do much more today, so don't buy it now. I would not buy it now. Sorry. Let's get back to the maybe a little bit more of a bounce on Monday, and then Tuesday, Wednesday, come back down here. We test this low right there, and that probably will meet the 200 period moving average. And where that happens, what's the date on that? The 25th, 26th of February. Well, that's kind of the most pessimistic scenario. I have a feeling that it's going to meet the 200 and tag the what is it, 580, 582 a little sooner than that. In other words, more of a direct drop. And it might just start dropping on Monday. In fact, all next week, it might just drop until it gets down to that level. So I would just avoid the NASDAQ right now. A little bit more upside. If you bought this morning, pat yourself on the back, but I wouldn't be long over the weekend. However, the S&P 500, which we bought this morning right off the bell in the live trading room, can be held over into next week. I think you're going to be okay. Now, it is in the same kind of range that we saw with the Dow Jones. It's just a little bit behind schedule, right? So the Dow Jones is already in breakout mode today. The S&P is not, but I think it's going to get there. So maybe next week it gets a little choppy, but it probably will hang out above the 50 period moving average for the most part, a day up and a day down, a day up, a day down. We've seen that kind of sideways churn, choppy stuff before, but I suspect that most of your upside is going to contain itself under 696. And then maybe the week after that, 2 weeks from now, we get the breakout move just as we did already with the Dow. All right, so S&P can hold it if you're already long. I wouldn't sell it. The Dow, if you joined us and you're enjoying the breakout, hold it. I think we'll get a little bit more upside next week. The NASDAQ 100, if you're already long, I would not be long much longer. Because I do think that there's just too much downside pressure and there's too much bad stuff going on in the mags. And I'll show you the mags in just a minute. Now, the Russell 2000, however, is in a fresh breakout mode. It's a different kind of setup. This is just a pure pullback setup. That's not a sideways consolidation. It's not an asymmetrical or symmetrical triangle like the Dow. It's just a nice pullback, tagged the 50 period moving average yesterday. We bought TNA right off the bell this morning in the live trading room. We bought IWM calls in the live options room, and we're enjoying a nice move from there. And it's a fresh breakout. Now, all the indexes are going to have churn. They're going to have chop. You're going to get one day up and one day down. But I do think that the small cap, the S&P and the Dow are going to have more upside than downside next week. And on balance, mostly bullish, resolve to any little pullback that we'll see on an intraday basis, right? It's just technical analysis 101. All right, now let's look at some sectors. So we've got 3 of the 4 major indexes leaning bullish next week. Nothing major, nothing to get too excited about, but some good stuff there. You can make money from them if I'm right. The NASDAQ, I would say avoid for at least a week, right? Give it a time to come down and test that 580, 585 level, maybe hit the 200 period moving average. That would be a big pullback, right? In fact, if the QQQ hits the 200 period moving average and it holds, I think we'll probably be very active in our wealth building portfolio, which is in the live trading room. That's what we use to take advantage of major market pullbacks, anything over 5%. I get very interested in adding to the wealth building portfolio, and we haven't been able to do that for a while. So yeah, it's time to get out. When you see that, when you see QQQ hit the 200, hold and reverse, then it's time to put on some longer term trades and start adding to your long-term portfolio. I'm pretty sure I'm right about that. And I think the rest of the year is probably going to be okay, right? Mostly okay. Not the best year, not like this last year. 2025 was very good, but it's going to be okay. We'll end up green. Okay, now let's look at some other sectors. We'll talk a little bit about silver. I think silver is a scary chart, right? And I know from personal experience that I started buying silver down in this area and bought a little bit more. We were kind of trading in and out in the live trading room, mostly with AGQ. And then we hit a real runner and we saw our AGQ shares go way up. We saw our silver calls go way up. And I didn't take advantage of that top there and held through the big Friday crash. And it wasn't pretty. So I still have a little bit of AGQ on. I don't have any more calls. Got rid of those on the nice little bounce here into the 21 to take out at least some profit. But I'm still in some AGQ, nibbled a little bit more yesterday. And here's what I think is going to happen with silver. Gold is a little bit more bullish, in my opinion, than silver, but I think silver is going to build a little base down here and probably not do a whole lot for another week, maybe more, but at least a week. Going to build a little base, right? Just underneath some of these lows and on top of some of these highs. And I'm sorry, on top of the lows and underneath. Well, anyway, you get it. There's a little bit of a trading range. It's going to kind of go sideways there in the pink zone. And then I think we do have, and it's not going to be as fun as this one was, but we're going to have from that point on into the probably the end of the year, we're going to see those highs tested up again. I have a guy in my pro trading group. He does a lot of work with cycles, and he's calling for 140 for silver, SLV 140 by the summer. And I was out, when it's up here around 110, 120, I was thinking, oh, it's going to go to 200 by the summer. I've had to backpedal on that one, but I do think that we'll see a good bullish resolve for silver. But again, near term, you can add, you can nibble. I don't think it's going to go down too much further. Don't think it's going to go up too much further for about a week, maybe 2 weeks, and then it builds a nice little base. Confidence comes back into the market. And the reason I say that is not that there's anything going on here technically that's telling me that. It's more about the demand is still super strong. Solar stocks are still going up. Enphase had a huge upside on its earnings report. Solar is a big user of silver. Data centers, big user of silver. You've got all the hyperscalers doubling their CapEx this next year in 2026 and projected to do it again in 27. And all that demand requires a lot of silver, and that's only going to cost the producers to really do the thing. And then you've got crimps on the supply side. So you've got two things going on. Demand is going up. Supply is coming down, and that can only squeeze price higher. Until that changes, I don't think you're going to get a major bear market in silver other than what we saw there for a couple of days. Now, gold is a little different because it is an asset. It's got value in terms of balancing against the dollar, balancing against the Fed, balancing against inflation and other things. And if you've got World War III happening over in Iran, and you've got geopolitical stress elsewhere, you're going to see gold get a good rally. And it's also a much healthier chart. It didn't have the big pullback, but not nearly as deep, not nearly as far. And now it's printing a little bit of a bullish, just a bullish wedge here. And that's the base. I'm talking about silver building a base that looks kind of like that, only a little more prolonged. Gold is already building out that base and is getting quite close to breakout. Now we're long shiny. We bought some, I think it was there at the 21 period moving average yesterday, or maybe it was a couple of days ago, and maybe it was even on this drop down here. I'm not sure when, but we are long shiny, and I think that's a good trade. Now, the miners for both gold and silver, SIL, SILJ, GDX, etc., I would hang off on those for now. You need the metal itself to really get a good run. The metal usually leads the miners. And also the other problem with the miners is that oil is up, right? It's very high, and that puts a damper on the cost of mining the gold and smelting it and transporting it and all that stuff. So with oil high, and I don't think it's going to stay high for very much longer, but with oil high, you're going to see a real headwind against the miners. But I think, of course, if I believe gold and silver are going to go up, the miners will follow as well. And if you look at ratio charts of the miners to gold, GDX to GLD or SIL to SLV, if you look at the ratio charts of those, you'll see that every time that really bottoms out, you get the beginning of a really nice run in the miners. And we're pretty close to the lows that we've seen in years. So miners have a big catch-up trade. Bitcoin is up today. It's up very nicely, 10 points, but I do think that this is only the beginning of a bottoming process. We're not going to get a V bottom in Bitcoin, I don't think, and we probably will get another leg lower. So I wouldn't be a buyer here other than just to do a little day trade, let it fill the gap, and then And I wouldn't short it either because I don't think it's going to go down too much further. But I do think that Bitcoin is not quite ready for prime time. I like what it's doing today, but I think this is, as I said, the beginning of a bottoming process that may take another 2 weeks, maybe less, something like that. And then we can take a look at Bitcoin. Now, some sectors that you want to be in. I would just avoid software for the most part, but there are some good sectors. We were in the regional banks. They're doing fine. I don't see them slowing down over the next couple of weeks. They will eventually, but I think big banks and small banks are going to have a pretty good uh, ride through the middle part of February. I'm not really looking beyond that for any of this stuff. I'm just kind of trying to map out what the market should be doing over the next couple of weeks, and we can make our decisions based on that. And then once we get out there, we can start to see, oh, what's it going to do in March? But we're not there yet. So small regional banks have been strong. They're a good place to be. We've got a couple of regional banks on in our trend trade letter. Take a quick look at the solar sector. I do like what this is going on. It's been a very strong sector, right? When energy stocks themselves have been going up, oil has been going up, solar tends to not go up as quickly as those guys, but it is having a great year. It really is having a very good season here. So you can play FSLR, you can play Sedge, you can play CSIQ, the Canadian company, Enphase I just mentioned. So keep an eye on solar, because as solar demand goes up, as solar prices go up, as solar companies start making more money, the demand for silver is going to be even bigger, right? Silver is a play in solar. I've got a lot of silver on my roof because we have a whole bunch of Enphase components up there. Silver is in solar panels, it's in EVs, and it's in data centers, and that none of that is going away anytime real soon. I kind of like the robotics sector, big down, but it's still nicely uptrending. Big green stick today. So you've got I can't even name some of the robotics plays. ISRG is in there. A couple of the quantum computing plays are in there. I'm not sure what else is in there. The SNPS is in there, whatever that company is. Okay, so that's a pretty good place to be. Copper miners, COPX, like the gold and silver miners, not quite ready yet, but this one is much better set up, and it looks to me like this is really ready to go. So if you're thinking about drilling down into the companies, you want to look at FCX and you want to look at SCCO. And forgive me for not knowing the company names for those, but those are the two biggies in the copper mining fund. And if you want to cover all your bases and have exposure beyond America to mining companies all around the world, then COPX is a good vehicle for that. So falling wedge, bullish, ugly day yesterday, bounce back today above the 21 period moving average, and it's knocking on the door of the top line there of the wedge, and that usually leads to a breakout to the upside. Okay, home builders have been strong. They are in breakout, and there's some good looking names in this group. You can think about PHM Pulte, you can think about Toll Brothers. Those are the two I usually trade, or you can buy XHB. If you want to add some exposure to Home Depot or Lowe's, you can use NAIL, N-A-I-L. It's leverage, so be careful. XLB was down yesterday on a lot of the mining plays, but it's been very, very strong, and I don't think that's going away anytime real soon. It's the materials sector. I would avoid energy for now. It's been good, but I think it's going to come back down, as I said. Banks are good, and they're not as good as the regional banks, but I think both regionals and big banks will have a good couple of weeks ahead. We are in some industrials. It's also a good space to be in. It is in a nice looking uptrend. This is the target price for XLI. It's up here around 175. We have been in and out of staples, and we took a big profit yesterday on XLP calls in the live trading room, and it's only higher now. So XLP, I'm not sure I would trade XLP itself, but if you drill down into the space, you're going to find Walmart and Pepsi-Cola and Coca-Cola, and all those guys are up at all-time highs. Very strong, probably not going to go away, especially if you see a lot of weakness in the tech spaces, QQQ week, the MAGS week. I think utilities are going to have a pretty good day. It's just been very flat. It's not ready yet, but maybe next week. Safe haven play coming in if the QQQ falls. Healthcare, we are in healthcare in the live trading room. Nice looking wedge right here. Big green upstick day today on good volume, and this just looks perfect, right? Nice tight consolidation of a good strong uptrend, and the next leg higher should really fly, and we're already into that one. And lastly, the consumer discretionary, avoid. This is mostly Tesla, and I think Tesla is going to have another leg lower. I'm afraid to say probably will start early next week. Okay. Oh, and lastly, the emerging market space. If you want to kind of diversify a little bit, this is a perfect looking bullish chart. It's kind of boring, but hey, it's going to be better than the QQQ over the next few days, right? Bull flag, push off the 21, everything's rising, everything looks great, and you've got a little bit of a breakout move today. Now, two last things to show you. VXSLV is the measure of volatility in the silver index. So this determines how many puts are being bought, near-term puts, right? Next week out, how many people are buying puts, how many people are buying calls. And when this is falling, you typically get a nice push up in silver, and it's just not doing much of anything yet. So that's why I kind of think there's still some bearish sentiment around silver. That's got to ease itself out, and that will if it prints a base, and then we should go from there. And the same is true for gold, which has been falling, which leads me to believe that gold is a better space to be in right now than silver. Okay, now just a handful. Let's look at the mags. So Amazon down on earnings, and I would say that's a no-go zone for a while. All these big hyperconductors, hyperscalers are not going to do well for a while because the market doesn't like what's going on there. Google is down today when everything else is up, and that's not a good sign. Facebook just keeps falling. I would just avoid it. Netflix is horrible. I would avoid that. Apple has been good. And, the reason why, because they don't have much investment in data centers and AI, like very, very small. So they're kind of outside of the fray. They'll probably come up here and test all-time highs. I wouldn't buy Apple right here, but I would hold it if I was in. Qualcomm in the semiconductor space had a good earnings. Just I'm not sure why it got knocked back so far. But it should, with the semiconductors doing well, and in my opinion, going to do well over the next few weeks, this might not be a bad rebound play. I would avoid Microsoft. I would certainly avoid Oracle. Tesla, as I said, you want to short this little pop here because I don't think the downtrend is done. Where will it end? I don't know, but maybe these lows down here around 385. Yeah, maybe 385. Certainly the 200 period moving average, but I think it could go lower than that. I really do. Maybe 360 by the time all is said and done. It's just gotten too much and too many unknowns and too many question marks there in my mind for Tesla. NVIDIA is coming up with earnings, and it should be okay into earnings. After earnings, I don't think it will be okay like the rest of the mags. So sorry. And then Avgo is actually not too bad. Is rebounding off of the 200 period moving average. Nice big up day, and in the space that I think is going to stay strong even if the NASDAQ falls, which is the semiconductor space. Same is true for AMD. All right, guys, I'm going to let you go. You should have a good map of the major indexes, the sectors, and a handful of stocks that you can focus on over the next week or two. Next week, as I said, keep an eye on the NASDAQ. It should be weak, should roll over sometime Tuesday, maybe Wednesday, and then give us a leg lower. I would just stay away from it until it bottoms out. But I think when we get out to like the next week after that, we should be in a pretty good place to buy the NASDAQ. All right, guys, God bless. See you back in the room in just a little bit. Bye for now.